Hello and welcome to another update video about Bitcoin. Let's take a look at the shorter time frame. At the moment, there isn't much going on the Bitcoin chart. There isn't much going on. We are consolidating just below all-time high. We want to talk first about the context that we're dealing with here, and then I want to explain to you the microstructures. As I said, it's a little bit slow at the moment. It's a little bit boring, but that's okay. That's absolutely okay, because that is a correction. And I mean, if this carries on for a little while and maybe Bitcoin produces a nice corrective B wave rally or something, maybe that's even really positive for the altcoins. We'll see. But in a correction, and we were expecting a correction, we've been talking about a correction now for several days, I think since last Thursday, Friday. And as we were heading into the weekend, the forecast was short-term bearish. And this is currently what's materializing. So we continue to move in this correction, which is defined as an ABC structure. If you're ever wondering what the overall context is that we're dealing with at the moment, even on the daily time frame, once a day I cover the daily chart in a video. Also, you can just take a look at one of our last posts on Twitter, the X network. Feel free to follow us. This is Twitter X. We have an account there. Feel free to follow it. You'll find the link in the video description. And here I posted the daily chart. It was on Saturday morning, and pointed out that zoomed out, we can see that the movement into the weekend is still looking short-term bearish, as we're clearly still in a correction. And then the ideal support range is still between 50,700. Okay, that's quite far away. Not necessarily saying we come down to that level, and 61,800. So I think that sounds much more realistic. But those are the relevant support parameters. And whenever you don't know, what's going on, just check if we have posted on Twitter. The latest updates are available for gold members in our membership. So looking back at the shorter time frame, that at least clarified, I hope, the context. So we are in a correction after wave 3 topped here on Thursday, and then the outlook for the weekend was short-term bearish, at least corrective, not for making a new high. Even though I always have to add, B waves can of course overshoot, but it currently doesn't really look like that. What do I mean with overshooting? I mean that this B wave does overshoot the previous high, right? That's what it's, that's what they can do. It means basically an all-time high, a new all-time high, but part of a correction, not as part of an actual trending wave. I know that's a bit difficult to understand if you're not so familiar with Elliott Wave, but no need to worry about that now, because there is currently no sign of an overshooting B wave. In fact, we completed this A wave, which is the first wave of a correction in this wave 4 that we're dealing with. And if I zoom in a little bit, we are now likely in this B wave. Actually, this worked out really nicely. On Sunday, I posted that we are likely here in this A wave. It should reach the area between the 38.2 and 50% FIB level. It did that. Okay, I mean, I'm not making the markets, but I can only point out what typically are the ideal structures. And very often the market follows them because they are the ideal structures. Now the market occasionally deviates from that and follows the less probable path. I mean, that's normal, because even less probable pathways will be traveled occasionally. Is the road less traveled is also sometimes chosen. But at the moment, it's all going according to script. So we have this A wave to the upside, a B wave pullback. I defined that support area, I think, with you in the previous video. The market actually dipped into it, reacted to standard resistance. That's basically what we wanted. Dipped into the support region and could now be in this C wave to the upside. I think what's really important now to recognize is what is the ideal target for that C wave. Now, it's very simple. We have the A wave rally, then a B wave pullback, and we can, based on that assumption, based on the measurement of the wave A, we can forecast an ideal target for the C wave. And that's 71,100. Doesn't mean it's a great setup. It's a corrective rally, okay? But still, it's possible and expected at the moment that we get a C wave rally, because the move down looks corrective. Seems like we have some reactions to the support area. And from here, I would, somewhere here in this region between 65.4K and 67.1K, I'd like to see a reaction and a C wave rally. Is it absolutely needed? No. But if I really zoom in and just take a look at this structure, I would prefer another high. That would be my preferred scenario, okay? But because we already reached standard resistance, which is the standard resistance area for this B wave. It was already touched, even though it's very weak, but it was touched. So therefore I cannot rule out that all of wave B is already finished. I wouldn't prefer that, because it would mean it's a very, very shallow B wave only. We want a more extended B wave. It's just more probable, okay? And also more healthy for the overall correction, because if we see too much weakness, then at some point it might indicate, okay, maybe something more bearish is going on, but at the moment everything okay. We're navigating here the probabilities of this correction. It's difficult to track corrective structures. I think for now it's all going okay. And what, again, I just have to mention again, what's more important than the actual structures are the relevant support and resistance levels, okay? So you don't need to understand the ins and outs of the Elliott Wave structures necessarily. I think it's helpful, but you don't need to. There are the Fibonacci support levels on the chart and the resistance levels as well, to which the price is expected to react. And so far we see reactions. The price rallied from down there into the resistance area, tried twice to get above or into the resistance area, got rejected. It's now dipping into support. There was already a reaction to support earlier today, overnight actually. But yeah, I mean, everything is okay at the moment. The move down looks corrective, which suggests that this is a setup for a C-wave rally. So that's sort of what I'm watching for now. There could be a bit of turbulence around the end of the daily candle, of course, but we always have to be ready for changes in wave counts in corrections. But I think it is clear from what I showed you on that Twitter screenshot, X network screenshot, where the journey ideally takes us. What I cannot rule out is also something more bullish, but that's not the preferred scenario. So as long as the support area is holding, the focus can be on higher in the short term. In the C wave, that would be my preference, and then a reaction to resistance to the downside. If we, however, instead of 3 waves, see 5 waves as per the yellow count, then something more bullish is unfolding, and after these 5 waves, we can add another support area to the chart for the next long trade setup. But for now, it is expected that this correction is unfolding and continuing. That's my update about Bitcoin. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.